Welcome to the weekly market recap with Sampath Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. The central bank's interest rate decisions play a key role in shaping borrowing costs, inflation, and overall economic activity. While inflation has picked up in recent months, policymakers are balancing the need to contain price pressures with supporting economic growth amid an uncertain global environment. The Central Bank of Sri Lanka has kept its policy interest rate unchanged at 8.75% following the latest Monetary Board review. According to the monetary policy statement, the decision was based on an assessment of domestic and global developments, particularly the uncertainties arising from renewed tensions in the Middle East and their potential impact on inflation and external sector stability. The CBSL noted that higher global commodity prices, especially petroleum prices, could weaken global economic growth and create spillover effects for Sri Lanka through several channels. Meanwhile, headline inflation accelerated to 6.8% year-on-year in June 2026, mainly due to high domestic energy and food prices. The central bank expects inflation to remain above its 5% target in the near term before gradually returning to the target level. Core inflation is also expected to increase and remain close to the headline inflation target. However, the CBSL said medium-term inflation expectations remain well anchored. According to the statement, although the recent rise in inflation has largely been driven by supply-side factors, domestic demand has also strengthened. The central bank expects the monetary policy tightening introduced in May 2026 to continue flowing through the economy in the coming months. Looking ahead, the CBSL said the earlier policy tightening, together with other measures implemented by the government and the central bank, is expected to moderate credit growth and reduce demand pressures, helping maintain price stability while supporting sustainable economic growth. On the external front, the central bank noted that pressure on the economy has eased somewhat, although the outlook remains uncertain due to renewed geopolitical tensions. Since April 2026, the external current account has recorded a deficit mainly because high fuel import costs widened the merchandise trade deficit and tourism earnings slowed. However, import demand, including demand for motor vehicles, is expected to moderate in response to recent policy measures. On a positive note, workers' remittances have remained strong during 2026. Gross official reserves stood at $6.45 billion at the end of June 2026, despite foreign debt service payments, while the Sri Lankan rupee has stabilized in recent weeks following the policy measures introduced by the CBSL. Strong credit growth is often a sign of rising business confidence and economic activity. However, it can also fuel inflation if borrowing expands too quickly. According to the Central Bank of Sri Lanka, the recent policy tightening is expected to keep lending on a more sustainable path while supporting the country's broader economic recovery. The Central Bank of Sri Lanka says the recent surge in private sector credit has been broad-based across the economy rather than being concentrated in a few sectors. According to the Governor, Dr. Nandalal Veerasinghe, strong lending has been recorded in construction, wholesale and retail trade, financial services, and consumer-related borrowing, reflecting the country's broader economic recovery. Based on outstanding credit as of May, the industrial sector accounted for around 37% of total private sector credit. Services represented 30.5%, while personal loans and advances accounted for 24%. Agriculture and fisheries made up the remaining 9%. The governor also noted that sector-wise credit data for June will be released shortly. Looking ahead, the CBSL expects the pace of lending to gradually moderate as the impact of 100 basis points policy rate increase introduced in May, together with other policy measures implemented by the government and the CBSL, continues to flow through the real economy. According to the central bank, these measures are expected to slow credit expansion and help contain demand pressures, supporting more sustainable economic growth. Meanwhile, private sector credit expanded by 27.8% year-on-year during the first 5 months of 2026, equivalent to an increase of 824 billion rupees. Total outstanding banking sector credit to the private sector reached a record 11.04 trillion rupees in May 2026, up from 10.8 trillion rupees in April 2026, representing a month-on-month increase of 2.2%. Sri Lanka's export sector continued to strengthen during the first half of 2026, providing a boost to foreign exchange earnings and economic growth. The latest figures also highlight the increasing contribution of high-value manufacturing and knowledge-based services, even as some traditional export sectors remain under pressure. Sri Lanka's export earnings surpassed the $9 billion mark during the first 6 months of 2026, supported by strong growth in both merchandise and services exports. According to the latest figures released by the Export Development Board, combined merchandise and services exports reached an estimated $9.01 billion between January and June 2026. That represents an 8% increase compared with the corresponding period of last year. Merchandise exports rose 8.95% to $7.07 billion, while services exports increased 4.49% to $1.94 billion, reflecting the continued expansion of Sri Lanka's knowledge-based economy. Meanwhile, total exports in June 2026 climbed 12.53% year-on-year to $1.66 billion. Merchandise exports increased to 15.09% to $1.31 billion, while services exports rose 3.75% to $344.52 million. Commenting on the performance, Export Development Board Chairman said the results demonstrated the resilience and competitiveness of Sri Lankan exporters despite evolving global market conditions. Among the strongest performing sectors, electrical and electronic components exports surged 123.48% to $450.2 million, while ICT and BPM exports grew 17.63% to $885.42 million, highlighting the growing contribution of the country's digital economy. Other sectors also recorded healthy growth. Coconut-based products increased 14.59%, food and beverages rose 24.45%, seafood expanded 17.61%, and rubber-based products recorded growth of 5.24%. However, traditional export sectors continue to face challenges. Apparel and textile exports declined 6.07% to $2.44 billion, while tea exports fell 5.69% to $700.8 million. Exports of spices and essential oils also edged down by 0.1%. According to the report, the United States remains Sri Lanka's largest export market, accounting for about 22% of merchandise exports, with shipments reaching $1.44 billion during the first 6 months period. Accounting for about 22% of merchandise exports, with shipments reaching $1.44 billion during the 6 month period. India became the country's second largest export destination after exports surged 36.16% to $688.47 million, overtaking the United Kingdom. Exports to Turkey and China also recorded strong growth. Looking ahead, the EDB said the strong first half performance reflects Sri Lanka's progress towards a more diversified and competitive export economy, with services and high-value manufacturing expected to play an increasingly important role in generating foreign exchange and supporting long-term economic growth. The latest economic indicators point to a mixed picture for Sri Lanka's economy. While inflation continues to rise and agricultural output has weakened, financial markets remain relatively stable and foreign investor interest in government securities has strengthened. According to the latest weekly economic indicators report released by the Central Bank of Sri Lanka, tea production declined during the first 5 months of 2026, while inflation continued to move higher. The report said tea production recorded a year-on-year decline between January and May 2026, mainly due to lower output in March and April caused by adverse weather conditions. Rubber production also declined during the same period, with a notable contraction in May 2026 as increased rainy days reduced tapping operations. Meanwhile, inflation continued its upward trend in June 2026, The National Consumer Price Index headline inflation increased to 5.4% from 2.4% in May 2026, while core inflation edged up to 4.5% from 4.4%. The Colombo Consumer Price Index also accelerated. Headline inflation rose to 6.8% in June 2026 from 5.5% in May 2026, while core inflation increased to 4% from 3.9%. According to the report, prices of 13 out of 17 key food commodities increased during the period from July 13 to July 17, mainly due to the escalation of the Israel-Iran conflict. Global crude oil prices remain broadly stable after reaching their highest levels in mid-June. However, Brent crude oil prices increased by 85 US cents per barrel, while West Texas Intermediate or WTI crude oil prices rose by 7.67 US dollars per barrel compared with the previous week. In the monetary sector, the weekly average weighted prime lending rate declined by 9 basis points to 10.38%. The average weighted call money rate also eased to 8.95% from 9.01%. On the physical front, Treasury-bill yields remain broadly stable, while Treasury-bill and Treasury bond auctions continue to attract strong investor demand, with both auctions oversubscribed. The report also noted that foreign investor holdings of Treasury bills and Treasury bonds increased by approximately 4.54% during the reporting week. Meanwhile, the Sri Lankan rupee had depreciated by 7.8% against the US dollar on a year-to-date basis as of July 17, 2026. Let's take a look at this week's Treasury bill auction results. At this week's Treasury bill auction, yields were mixed across the three tenors. The 91-day T-bill rate yield fell below the 10% mark, declining by 18 basis points to 9.95%. The 182-day T-bill rate eased by 3 basis points to 10.24%, while the 1-year T-bill rate remained unchanged at 10.02% compared to the previous week's auction. Thank you for watching. We'll be back next week.